Ajay Bodke of Prabhudas Lilladher also joins in. Ajay, quickly, what are you telling your investors and your clients on how to approach this big event?
Good morning, Sonia. I think although there will be an initial wobble in all the three markets, currency, bond and equity markets, we feel that I think one should sort of look at buying into the dips. I think what we are saying is that we are underplaying the seminal role played by the government in creating conditions for the RBI to lower interest rates. The government could easily have relied on its fiscal adherence, medium-term fiscal consolidation plan in very trying circumstances. But the government has played its role in terms of adhering to the fiscal discipline, which created the conditions for Dr. Rajan to lower rates. So I think, let's not forget that. Secondly, the FDI flows in 2015 in India have been the highest ever. We have surpassed China as well as US. And there again, the seminal role played by the government in ease of doing business, in increasing the caps for various sectors like defense, railways, media, has played an important part. And thirdly, the monetary policy framework based on which inflation targeting has been laid out by RBI was prepared by Dr. Urjit Patel, who continues to be an integral part of the RBI team. Also, I think it is not, in my opinion, the Brexit or Rexit, but we must focus more on rain exit. There's been a 25% deficiency from 1st of June till now in the rains, and all of us must be concerned about that, because one has seen a rally in many consumer-focused sectors which depend on rain. And lastly, I think, as long as the government chooses someone who has credibility in the eyes of domestic and foreign institutional investors and who is seen as independent-minded, I think the market should take this exit in stride and start looking and focusing on rains and sort of the corporate earnings.
Well, thanks a lot, Ajay, for joining us this morning. I wanted to ask you more stock-specific issues, because in this overall macro discussion, we are forgetting some developments that happened on Friday evening. The minimum import price for steel may not get extended from August. That was what our colleague Ritupurna Bhoyan picked up from Delhi on Friday evening. Would you now worry about steel stocks? Is there a near-term profit booking?
I think I would wait it out and see what the final decision is taken by the cabinet, because I think the MIP package was one that resuscitated an almost comatose steel sector in India, when globally I think steel prices still continue to suffer from oversupply and prices are under pressure. So it is absolutely necessary for the government, in my opinion, to give a further extension by 6 months to the MIP. Because let's not forget that steel remains the biggest pressure point from the domestic banking sector in general and PSU banking sector in particular. And hence, I think it is absolutely necessary that there's an extension by at least 6 months for MIP. In case, as you've said, it doesn't happen, then it does spell some trouble for the steel sector as also the PSU banking sector.
The other big news flow that took place last week was the HDFC Maxlife merger, and now there's so much interest once again in the private life insurance space. Are you interested in either of these names?
Yes, we are. I think both the leaders, ICICI Prudential Life as well as HDFC Standard Life, have one of the best franchises in the country and some of the best practices. And I believe that I think both these companies, as and when the eventual listing happens, will attract a very large amount of interest from both foreign institutional investors and domestic institutional investors.
Okay. Well, if the market indeed offers a dip, what would you pick, Ajay?
As I said, I think all eyes are skywards, and I will be watching very closely the progression of monsoon, because there's a 25% deficiency till date. But I think we saw the arrival of monsoon in Mumbai yesterday, so good omen. So I think as the monsoon starts coming, as and when it returns roaringly, I think the sectors which will benefit from consumption, namely cars, passenger vehicles, two-wheelers, consumer durables, and selectively banking, consumer finance and and mortgage finance companies would remain our preference.
Okay, all right. Stay on. We'll come back to you in just moments from now. In fact, let's thank you on that note, because we have a long list of guests joining us. Ajay, thanks so much, and have a good week.